Hi and welcome to this live currency strength indicator table video with me, John, on this Thursday, the 1st of June. Here you can see we have our tables in front of us. Our table showing us that the New Zealand dollar still remains one of the weakest currencies, or the weakest currency according to both tables. So that's where we're going to be focusing our attention. And we've got three strong currencies at the moment. We've got the pound as S1 on our day traders. We've got that followed by the Canadian dollar, followed by the US dollar. So the US dollar actually slipping down the table slightly, showing that maybe there's a little bit of momentum fading with the dollar in particular, but looking to see if pound Kiwi is going to continue to move to the upside. Now you can see here, I'm on pound Kiwi weekly chart. Price has traded through the 2.0500 level and looking to see if that market is going to basically continue to the upside here as we're breaking through these structure highs. Now if I just expand this chart out, the next level of resistance I've got marked as 2.0950, which are these highs that formed all the way back in 2020. So March 2020 is those highs just through there. So looking to see if price will target those highs once again, and looking for opportunities here. Now this is a weekly chart, so if the weekly was to close like this, I'd expect a pullback going into next week before seeing a continuation. If we look at the daily chart, however, this is what I mean by maybe the chart is a little bit overextended. We've rallied all the way down from the 1.9800 lows, and we haven't really pulled back here. Price has just got in pretty much in a straight line to the upside. A couple of days of pullback around highs, but ultimately we've seen a continuation. So what I really would like to see is a opportunity for us to get involved in the market, and that's only going to come if we do get a bit of a pullback. So I might be watching this daily chart. This might be one for next week, because obviously we're on Thursday now, so we might not get an opportunity into this market. So if we were to see next week that price did start to pull back and we got the opportunity to then maybe look for longs at the previous area of support, that could offer us an opportunity to trade higher. Now from a day trading perspective, what if the price doesn't pull back? Okay, then we could be looking for opportunities on lower time frames. Again, looking at this 4-hour price action though, it's where do we possibly get in on this move, and there's not really many pullbacks to work with unless we go down to an hourly chart where we can see price clearly making those higher highs and higher lows. So for me, really, it's always looking at where's the best to sort of position ourselves. Now we do have this area down through here where you can see was resistance and support, so if price was to come back to that, maybe we could start looking for some long ideas around there. I would just be super cautious that we have rallied so much recently that if price trades through these lows, we're probably going to move back down towards this key level of support. So I would be actually very cautious here about getting long just yet. I would want to see a daily pullback first. So I think that's what we need to wait for here on pound Kiwi, despite seeing this aggressive strength to the upside. But that gives us opportunities. If it closes like this next week, if we get a pullback, look for the continuation move to the upside. Another chart of interest then is Kiwi CAD. We can see CAD remaining strong on these tables. So if I just open up the Kiwi CAD chart here, again just looking at that weekly time frame, it's telling us that we should be looking to be short this market, and we're actually trading through a bit of an area of support at the moment. So we've got the horizontal support at 0.8250, which is formed basically through these highs here, and this aggressive high that formed back in August of 2022. We're back there again. Price did find support here most recently in April, the 16th of April, and we did rally back up to the upside before coming lower again. Price working within this sort of bearish channel that has developed over a large period of time here, pretty much since the sort of start of the year. However, it looks like we're getting a bit of a breakout situation here at the moment. Now, this is where we've got to be careful again, because what we don't want to be fooled into is a false breakout, because we're at a channel support low. Price could trade back within the channel, and obviously if we want to be short, we don't want to be short here. We want to be short back at the channel highs if that's what we're going to be working with. Alternatively, if price did confirm the breakout to the downside, let's say we had another week of a negative move. The reason why I say that is because there's not a lot of support until these lows here that formed back in September, around about 7675. So we've got to be a little bit aware of that. So what I would like to see is a strong close, because that would mean to me that sellers are aggressive in this market and that we're likely going to see a lower time frame trend. If I was just to go to the lower time frames now, again, like the daily chart, look at those candlesticks there on a daily time frame. We have aggressive selling coming in, which is great, good for momentum, but these candlesticks here are very shallow in range, not really convincing me that sellers are really going to drive the price further to the downside at the moment. So that's why I'm saying we probably need to be a little bit cautious with the Kiwi at the moment, just in terms of it looks overextended against some other stronger currency pairs. But that doesn't mean that it's not going to continue lower. I mean, look here, we look to the left when we had that large surge up, we only had very shallow pullbacks. Okay, so what we could expect maybe is another shallow pullback into the 0 spot 80 to 50 area, and then look for that continuation to the downside there potentially. So that's what I'm going to be looking for on this market as well. Now, we did talk about Kiwi US dollar yesterday. We talked about getting short at the 0 spot 6040 level with 2 recommended stop losses. The first stop loss is a minimum stop loss, and the second stop loss is a max stop loss. Basically, what we're looking at here is, depending on your risk appetite, do you want a tighter stop loss or a bit of a bigger stop loss that gives you room to breathe but still gives you a healthy reward to risk profile? So the second stop loss is a lot more conservative. It's sitting above the daily 200 moving average, so there's basically more barriers for price to having to get through to be stopped out. Okay, so that's a more conservative stop. Second stop, the first stop loss is a little bit more of a I'd say aggressive stop loss, although it is in line with our rolling ATR. So if price is going to move beyond our ATR anyway, you know, we're likely going to be taken out of that position. But targets are still down at the 0 spot 5850. I've still got this in play, looking for price to come back to that 0 spot 6040. I will cancel this trade before the end of the week. So if we get to Friday and it has not been triggered, I will cancel this, because you don't want to hold trades over the weekend, especially if you're using a tighter stop loss, just in case any news comes out and we get any kind of gaps and things like that. So just be safe on that side of things. So thanks for watching this video update, and I look forward to speaking to you in the next one.